Everybody, what is going on? It's your boy Crypto Bobby. I hope you are having a great day, great night, wherever you are watching or listening in from. Apologies for the earlier issues on the stream. I had to update my video driver and I was streaming with software, and apparently that just does not work well at all. So hopefully this is a lot better quality. But yeah, today want to talk about a bunch of different things. So number one, want to talk about the Ikigai market update that came out for September of 2019, which is what the title is based off of. They talk about the potential for new Bitcoin all-time highs in the next 12 to 18 months, some of the things at a macro level that might prevent that from happening, as well as why they believe that actually will occur if the macro events do not shake out in the way they say. So that's one thing I want to talk about. I also want to talk about what is happening right now with the crypto industry at large, where you now have Coinbase, which is starting to offer USD customers what they're calling API rewards. But basically, Coinbase is becoming a bank. And relatively funny because crypto is kind of the land of bank the unbanked, but also trying to get rid of the banks, long Bitcoin, short bankers, when some of the biggest companies in crypto right now are becoming basically banks. So we'll talk about that. And then I also want to discuss some of what's happening right now with discount brokerages. Not sure if you've seen, not sure if you paid attention, but E-Trade, TD Ameritrade, some of the largest discount brokerages out there in the traditional finance world have eliminated fees for trades. Typically you used to see like Scottrade, E-Trade, $7 trades, $10 trades, that type of thing. A lot of advertisements on that. And now those companies have actually, as of this week, basically all gone to zero trading fees. And I do think that you might see in this scenario, you might actually see crypto exchanges start to trend towards zero a little bit as well, depending upon how competition works out. So it will be interesting to watch that, and we'll talk about that in today's episode as well. So as a quick shout out to, if any of you are watching right now and you're looking for a new job in crypto, I have one job in particular that you might be a great fit for. If you are on the West Coast in the US, I'm working with a company. They're a $25 million Series A crypto trading platform. So they raised a bunch of money from some of the top VCs out there, and they're looking for a client support, client services professional. And it is a position where they're looking for somebody that can work kind of mid to late evening, so like a 2 p.m. to 11 p.m. shift to support their institutional clients that are trading on their platform. So if you are looking for an opportunity to break into the crypto industry, you're super passionate about it, position pays about $50 to $75K depending upon experience. Would love to hear from you. Go to proofoftalent.co/careers and you can get started there. But let's hop into the kind of start of today. And by the way, I didn't realize this when I was actually going to the grocery store, but I'm wearing my Montauk Brewing shirt because they're the most comfortable shirts out there. But I went there for Crypto Happy Hour to buy Montauk beer, so I probably went in there and looked like an absolute jackass. And I continue that trend by looking like a Montauk beer sales rep on YouTube Live. So that's where we're at right now. But got my Montauk Pumpkin Ale because I had to get a 6-pack of that because I love it. It's delicious. It's wonderful. It's great beer. If you guys want to sponsor the podcast, always feel free. So getting into today's discussion, Ikigai Asset Management, which is led by Travis Kling, or Travis is the CIO, Chief Investment Officer, who I'm sure a lot of you guys have seen on TV, rocks the suit very well. I've been getting their market updates for a long time. I had Travis on the podcast way back with Rocco, and this is one of my favorite things. So I'll put it in the YouTube comments as well. I would highly recommend giving it a read. It is one of the most comprehensive outlooks on the specifically Bitcoin market, but just generally the crypto asset industry. They talk about altcoins as well, but really gives a very thorough look into what they see at a high level happening within the industry, where they think things are going, and how they think things will end up panning out. For example, in the last month, so in the September 1st update, Travis had said, we believe that a higher likelihood outcome in the short term is a further correction down to 7.5 to 7.5 to 8.5K. What exactly happened in the month of September after that September 1st update? Bitcoin crashed to 7,500. It is now sitting in the $8,200 range. So it's literally sitting in that range that they had generally predicted, which goes to show, at least at a high level, the relative kind of capability and the worthiness of some of the research. So specifically, what I thought was interesting about the report, when you get to the end of the closing period, they talk a lot about the global macro landscape. They talk about the Argentine peso. They talk about some of the things that are happening with the euro, with Germany's bonds, as well as the overall negative yields that are happening and some of the global macro phenomenons that are occurring at this point. But so they say this: from a Bitcoin perspective, we see compelling evidence to believe we are in approximately the top of the second quarter of a cyclical bull market, an uptrend that will eclipse previous all-time highs by a wide margin in the next 12 to 18 months. So for the guy that was in the comments saying I'm a clown on YouTube because I said new Bitcoin all-time high in the next 12 to 18 months, that's what I was talking about. Yeah, jackass. But no, I'm just kidding. But you are a jackass. But so getting back into it, they talk a little bit about, in their view, the number one risk they see to halting this next Bitcoin bull market cycle would be a global risk-off shift in the coming months. They believe that a global risk-off shift is the only thing that's strong enough to stop the Bitcoin train right now. If the VIX, the volatility index, goes to 35, Bitcoin's price will likely significantly decline. So they talk about really the only thing that they see at a macro level that is able to stop Bitcoin from eclipsing previous all-time highs is if you see this huge macro risk-off shift. And I do think it's relatively interesting for a couple different reasons. Number one, it kind of gets back to the debate of whether or not Bitcoin is a risk-off or a risk-on asset. And in this case, you would see that, if they believe that it's not going to eclipse all-time highs, if there is a shift, if there's a risk-off shift, then it might not be what a lot of people talk about with the debate around risk-on, risk-off. But also, if we go down, so like I said, it's a super comprehensive report. We can kind of delve into a bunch of different information within this. But this chart in particular, I think, is really, really interesting. So let's pull it up. So it does go to show a little bit around, my face down, goes to show what they would consider a bull market, a bear market, accumulation, expansion, reaccumulation, and then a halving. And so that's kind of how they've traditionally described these market cycles, is these 5-part market cycles that have been sliced by a halving, which is obviously supply reduction coming onto the new market from miners. So when you have that, you're looking at when you have the supply reduction, that has typically started off a new bull market period, at least in their view and from their kind of view frame, as well as how they've broken down the chart. So over the next, where we're at, 12 to 18 months, so May of 2020, at this point in time, if things shake out how they have in the past, we would, over the next 12 to 18 months, until May of 2020, be in a phase of quote-unquote reaccumulation, where the bottom might look to be somewhere along the line of, let's say, $6,500. So if that breaks below, might be in trouble. But it looks like, according to what Ikigai and their team has looked at, we're going to be in this reaccumulation phase where we're going to be kind of stuck between $14,000 and $6,500. And then beyond that, when you see post-halving, that is when you might see a massive run-up. They have here traditionally from history. Obviously, past performance isn't always the best indicator for the future, but in the future, according to their chart, a bull run post 2020, post halving, might take Bitcoin all the way up at a peak mania to about $70,000. And so I will put a link to the description. So I put that once. If you guys want to check that again, I highly recommend it. You can subscribe. It's just super good research. You can make your own determinations, and they take mostly a Bitcoin specific approach, but they also talk about how altcoins might relate to Bitcoin. They've talked about really a massive pullback in liquidity as well, just the overall market not looking great from a liquidity standpoint with kind of things pulling back pretty substantially. They talk about bull cases. They talk about bear cases. So I think it's one of the best monthly updates that you'll see when it does come down to actually trading crypto assets, and something that you would likely enjoy. They're one of the best, I think, funds out there when it does come down to just putting out public information. So hopefully you enjoy that one. Let me know if you read that too. But hopping into the next thing that one of the what's up, Nasty J? One of the new things that occurred today was Coinbase. So Coinbase is now offering, we'll pull it up here, 1.25% on 1.25% APR on your USD that you hold on Coinbase, or your USD coin that you hold on Coinbase. So somewhat interesting, but it is somewhere where you can get interest way higher elsewhere. So I think that there's a couple different ways you can look at it. Number one, I think there's this whole within the crypto space, but also within the just fintech space as well. There is a big push towards all these companies getting as much AUM, or assets under management, as possible. They want your money, because as soon as they have your money, they could do a variety of things with it. But with Coinbase right now, so they are providing you 1.25% APR, or APY, they're calling it, on its USD coin. It's actually not USDC, it's USDC. It's not US dollars, which is a differentiator there in general. But this will likely increase the amount of USDC that's in circulation, and potentially increase the amount of USDC that you'll see circulated. But if we pop over to LoanScan, 1.25% is definitely not, I think it's loanscan.org. Maybe not. If we pop over to loanscan.io, and if we look at the interest rate that you receive on USDC elsewhere, it is much higher. So if we look at USDC, you can actually get, whether it's 8% on Nexo, 9.25% on Celsius, Crypto.com 6%, although some of these CoinList at 5.8%, Compound at 5.3%. So I'm curious in the long run if this is something where you would be looking at Coinbase taking your money that you keep and paying you 1.25%, but actually perhaps lending that back out and making the difference. Like, let's say Coinbase was to take that dollar that you received, give you 1.02%, 1.25%. I am numbers. I need more beer. My head's fried today. But take that money, and then they could earn a lot more for that down the road. So I'm curious exactly how they're going to make money from it. But at a high level, I think it's going to start to show this kind of macro trend that crypto companies are going to try to be banks. That's really what it does come down to. You have crypto companies doing it. You have these fintech companies that are doing it. A lot of these companies in the U.S. and maybe abroad, I'm not sure where you might be located as well, but companies that started off with pretty narrow use cases in the past, things like a Betterment or a Wealthfront or a Robinhood, they're all expanding into these different areas. SoFi as well. They're all expanding into these different kind of all-encompassing areas where they're fighting for this like millennial consumer, where they want your money so that they can just continually sell you different services and kind of monetize the relationship in the long run. and that that starts with something like SoFi that originally was student loans for MBA students at Stanford, and then started with student loans, then personal loans, and then like credit cards, and now they expanded into crypto. So kind of along the same lines that there's just continual expansion. And I think Coinbase kind of recognizes where they are, and they're trying to expand upon that as much as possible and get as much of your money within their doors as they possibly can. Whether or not that's good or bad remains to be seen. I'm sure you could look at it in a variety of ways, but I think ultimately that's kind of what's happening in the long run. And so Hunter says that's an interesting point too. So Hunter goes, when I was talking about LoanScan and talking about the different companies out there or projects, decentralized apps, whatever it might be, that are offering interest rates for lending USDC, Hunter mentions, I haven't heard anything about any of those companies, but I'm registered on Coinbase. And that's the advantage for Coinbase too. So maybe somebody like Hunter here who logs into Coinbase in the future, sees, I just have some money sitting in here. Maybe I can make 1% on my money instead of just letting it sit here because it's sitting here anyway. But if you were to do a little bit of research, and not speaking negatively at all about you at all, but if you were to like actually look into it outside of just logging into your Coinbase account, you would be able to get, let's say, between 4 and maybe at least 4% higher from a fairly reputable place. So something worth considering, but it also goes to show like how Coinbase can make money off this because they have the most brand awareness for the most part. They have the most users. So somebody might not know of other opportunities elsewhere, and they might just choose to utilize what Coinbase has available. And so getting into kind of the third part of today's discussion as well. So before we hop into a bunch of questions, and I'll obviously take those as we go too. But one of the things that I think is pretty interesting that's happening now is over the past week or so, and this has been a long time coming, but over the past week, there was kind of this whole cascading effect where you had E-Trade, which is, E-Trade's famous for advertising cheap trading fees, right? You guys have been in the US, or I'm not sure how popular E-Trade is abroad, but you had TD Ameritrade slashing fees to zero, Charles Schwab doing the same, Interactive Brokers doing the same thing, and E-Trade was kind of like the last man standing. And E-Trade makes a shit ton of money off fees. So traditionally, I don't know what the fees were, maybe $5, $7, $10, something like that. I don't remember precisely, but let's say they were $7. E-Trade was charging $7 for every trade. Because all of their competitors were going to zero. Entrants like Robinhood came into the market and said, hey, you could trade for free, picked up a bunch of money from younger consumers and really grew their AUM pretty substantially. And now you have a company like E-Trade basically being forced by the market to not charge for fees anymore. And they're pissing away at this point in time approximately $300 million per year in revenue from that drop in commission. So I think that, overall, this doesn't necessarily have anything to do really specifically with crypto, but I do think it might transition into crypto in the long run. One of the most profitable businesses right now are crypto exchanges, right? Binance makes a ton of money. CZ was like the first person to, one of the fastest people to $1 billion in wealth, like ever. Like the dude just blew up in money. Coinbase makes a ton of money. Gemini makes a ton of money. All these crypto exchanges make a ton of money. Bitfinex, like all of them, they print money on a consistent basis. So that is due to fees, though, right? And fees are competitive in nature. And when your competitors are reducing prices and reducing fees, then either you kind of have to match that, or you might lose out. Like for example, a lot of people in the industry, and correct me if I'm wrong in the comments, but Gemini raised their fees to about 1% if you're using their consumer application. There are a couple things you can do. I think you can trade with their API, or they have like a pro Pro model where you actually reduce the fees, but Gemini's fees are like 1% per trade, which is a lot, right? Coinbase is not, Coinbase might not be that high. Some of these other ones might not be that high. So you have all these different, you have all this competition for specific trading fees. And then when you have somebody else who's charging a lot, the simple thing to do is just to undercut them. And eventually that kind of gets to a race towards zero, unless either there's some type of like collusion, or just generally speaking, nobody wants to piss away all their business. But it is something that I think is worth watching in the long run, because I do think for the benefit of the consumer, for the benefit of you and me, the market is moving in a positive direction towards a reduction in fees, as you'll see with what's happening with the E-Trades and the TD Ameritrades and the Charles Schwabs of the world. And another really good thing to read, this was posted in one of the Telegram groups I'm in, but we'll pull it down here. There's a lot of conversation around like how these discount brokerages actually make money, and I think this is worth a read if you want to check it out. I'll include a link below in the YouTube comments as well, so you can check that out. But this person accurately predicted commissions and discount brokerages will go to zero, and a few other things as well. So I thought this article was really solid and a fun read, because there's a lot of confusion around like the Robinhoods of the world and the E-Trades of the world, and how do these companies make money. And I do think it's slightly applicable to the crypto market. It's a longer read, probably take you like 10 minutes or so, but definitely worth the time if you're interested. So Dave G mentions this. Fantastic question, and we could take this on a little bit of a rant. So Dave G says, is coin market cap data accurate? I would love to hear from you in the comments right now, from all the folks out there, as I have a nice sip of Montauk Pumpkin Ale. Is coin market cap data accurate? Let's hear it. So pulling up, my man Jim Gibbs, fam. Not all encompassing, that's for sure. And Andres, we'll get into Binance US liquidity, so we'll talk about that. Lot of good comments. So I appreciate everybody there. So this is something that, again, another one, if you haven't read, certainly worth the time. This is an older. Arthur mentions Masari. Love Masari. Also, Masari / on-chain FX. Definitely recommend Masari. I also recommend nomics.com as well. But so this is the Bitwise report. And this is interesting because it goes to show some of the problems, not necessarily that it is coin market cap's fault per se, but there are misaligned incentives. And what do I mean by misaligned incentives? Well, in the crypto world, in the entire world, I think, I am a huge advocate for incentives. Incentives drive the world. That is what makes the world go, especially in the world of finance, or this kind of emerging world of crypto. So if we pop it down, we'll look at the market as a whole. This is a report from Bitwise. So they talk and they bring this up here, the top Bitcoin exchanges by reported volume, and this is from CoinMarketCap. So this goes to show some of the data on CoinMarketCap. So the top crypto exchanges by Bitcoin markets on CoinMarketCap. And I'd love to hear in the top 10 how many of these you've traded on in the past. You have Coinbene, you have OEX, BW, Bit4X, ZBG, Buybox, DigiFinex, Coineal, and IDAX. Those were the top 10 on CoinMarketCap as of the time of recording this, or as of the time of this Bitwise report, which was published in 2019. All the way at 2022 is Binance. Binance is at 22, which is crazy. So you have that, and the data that is reported is really it's all wrong. And so Why is it wrong? Well, number one, the use of CoinMarketCap data is mostly crap. It's important to note that. So getting back to the question, is CoinMarketCap data accurate? No, it's not. For the most part, it's not. There are some accurate elements of CoinMarketCap data, but there are many exchanges that manipulate CoinMarket specifically for the purpose of garnering new users. And then it helps the media, or it kind of pushes the media to misrepresent things and misrepresent volume and a variety of other things. Like the Wall Street Journal quotes CoinMarketCap. The New York Times quotes CoinMarketCap. Barron's quotes CoinMarketCap. That is a problem because CoinMarketCap is not always accurate. So taking inaccurate information and publishing that and using that is not traditionally something good for just the market in general. So like they look at what do real markets look like. They look at Coinbase Pro. They look at the volatility within Coinbase Pro, and then they look at suspicious markets like Coinbene, where they have trade printing. Basically, they are, and this was at the time the largest Bitcoin market in the world. I've never once traded on Coinbene. I've never once heard of anybody trading on Coinbene. So they engage in things like trade printing between the bid and the ask. They also engage in things like, we'll pop down here. Basically, we'll pull it up. They engage in basically printing trades at very specific times. So there are certain times where there's absolutely no trade volume, and then there are certain times where it's basically two people that are the same entity just trading back and forth and back and forth and back and forth to each other. And this was Right BTC doing that, so you can see that here. But you can also see a variety of things when you look at like a real world footprint too. So Bitwise, this is an older thing. I've talked about it in the past before, but Bitwise had looked at Twitter followers, Google search results, as well as overall web traffic. And you had a company that was doing like 18 times the volume of Coinbase that had 10,000 Twitter followers and had no venture funding, had according to LinkedIn, 42 employees on LinkedIn. Probably none of those were real, and really, really low web traffic according to Similar Web. So there's a lot of easy ways to just like determine this like fake volume. But the problem there with all of that lies in like, so we'll pull up volume on Bitcoin and we'll take a look at it. And so you can see right here, we're on CoinMarketCap right now. What is the daily volume for Bitcoin? 24-hour volume, it's $12 billion. But guess what? 449 million of that volume comes from a place called Vindax. Has anybody here heard of Vindax at all? No. What the fuck is Vindax? Has anybody heard of Right BTC? $382 million worth of volume. I will click on Right BTC right now, and I guarantee this volume profile is the biggest wash trading bullshit you will ever see in your entire life. Look at these trades. It is just a straight line back and forth. It is the most obvious wash trading and the most obvious fake volume you've ever seen, and that is currently the number 2 source of volume on CoinMarketCap. So number one, that's a problem because this gets included in the actual data that places like Wall Street Journal and the New York Times and all these big whatever news places use to report volume. Number 2, it's a problem, and the reason why they do this, the reason why they fake volume, is because they want newbies to go into CoinMarketCap. CoinMarketCap is the largest source for the most part for one of the largest traffic sources, one of the largest sources for new people in the industry, or just people in general when they're trading crypto. So they want people to go into Bitcoin and they look at the markets and they're like, oh wow, this place Right BTC is super liquid. I'm gonna go pop over there. I'm gonna maybe sign up for a new account. I'm gonna get the ball rolling and I'm gonna go trade. Meanwhile, they're literally trading with crickets. Like they're not actually trading with anybody. There's no volume. There's no liquidity. If you look here, I mean the actual spread. If you were to trade like 2 Bitcoin, you would take the price down $200 something on Right BTC. It should be called Wrong BTC, but that's terrible. So for anybody too who's like looking at CoinMarketCap and like, all right, you just ripped on CoinMarketCap, you just said bad things, you said it's bad. What do I recommend instead? So I would say two places. Number one is a company called Nomics. I've had Clay Collins on the podcast before. He is legit. I'm a big fan, and I would also recommend Masari's On-Chain FX. I think they are both fantastic places, and they use real volume, which is taken from this report where they take the exchanges that are not fake volume exchanges, and they basically exclude those and include the actual volume for these cryptocurrencies. So in both scenarios, I would recommend Masari and Nomics. I would also mention to you that when you do look at these exchanges, or when you do look at something like Nomics, if you're trying to check out, maybe finding a place to trade, right? You want to trade a cryptocurrency, you want to find a place that's actually good. I would check out Nomics, and you can click on the markets, and they have a pretty good analysis of where the trading is actually taking place, and they have this transparency rating. So they basically get access to the data from the cryptocurrency exchanges. They get access to their API and a bunch of data to make sure if it's real or not. So you can see like Binance has an A, Deribit has an A, Coinbase has an A, Bitstamp, Kraken. A lot of these exchanges that you know and probably have actually traded on have an A. But if we'll go down here and we'll go to the other end of the rating. Give me an F. Give me an F. There are a lot of exchanges that trade Bitcoin. Wow. Okay. Well, a lot of question marks. So so there we go. CoinEal and CoinBene Telegram is the ass end of the earth, according to my man J-Bags. And I have not been in those, and I would prefer to stay far, far, far away. And for those who are wondering too, so this is not, presently, this is not the Bitcoin bear market beard. This is I should talk to the microphone, right? It's not the Bitcoin bear market beard. This is the Jets bear market beard. I told myself I would not shave until the Jets won a football game, so I might be looking like Tom Hanks in Castaway sooner rather than later, or Tom Hanks at the end of Forrest Gump when he's like, I think I'll stop now. So So keep shooting those questions away. We'll definitely try to answer as many as I can, as always. So Max says those exchanges, and referring to the exchanges that are doing the nefarious work on, basically suspicious trading and trying to fake volume to gain access to higher ratings on CoinMarketCap. They might be stealing users' funds. I mean, that's certainly possible. They might just be trying to make money from fees. I mean, they need fees to survive, and they need people trading on their exchange to survive. Really, the best comparison, I don't know how many of you guys remember just like SEO spam in Google. So like, for example, back in the day, and I mean still to this day, like people will take advantage of Google. Like Google is the most prominent place to have your stuff featured. Everybody's searching on Google. If you can make your article or your business come up number one for a search term, that's really valuable, right? So people would, spam links and do all types of crazy stuff to have their business be high up on Google. And it's the same thing with CoinMarketCap. It is, the most common place to find information about cryptocurrency. So people are kind of, instead of spamming SEO links, they're spamming their own volume on exchange, and they're beefing up their volume so that they come to the top of the list and they're number one in the search term, and then people will actually trade there. So whether or not they do nefarious things after that, who knows? But even if they don't do quote unquote nefarious things by stealing users' funds, you can also get hurt because, for example, right BTC, there's $400 million worth of volume on a daily basis. But if you put in a 10 Bitcoin trade right now, granted, I don't know how many of you guys have $100,000 lying around or $80,000 lying around to make a 10 Bitcoin trade. But if you took in a 10 Bitcoin trade, you would have ridiculous slippage, like massive slippage. Whereas if you did that on any normal exchange, 10 Bitcoin might not really result in any slippage whatsoever. And so we'll talk about the subject to crypto.watch. I think it's crypto. Oh, no, that's the wrong one. Probably fix that shit. So we can pop over here to exchanges and you can look at, so you can see the liquidity on these exchanges, which is relatively interesting. And this is something that CZ tweeted about today that might be relatively interesting for you. So we can pull up CZ's tweet and he pulled the information from Crypto Watch. So 1 week in, Binance America, he said, has tripled liquidity, grown faster than Binance back in the day. And you can see that according to Crypto Watch, which is where I got the data, which Crypto Watch, I believe, is owned by Kraken. They are right now with Bitcoin, with USD, and let's see, we'll pull up Bitcoin too. On Bitcoin, they are 15th in liquidity, and USD, they are... I think 15th, maybe. They have a decent amount. Basically, they have a decent amount of liquidity across the board. Binance US does. So they have grown fairly rapidly. Somebody asked how that relates to the price of BNB. To be frank, I have no idea. That just means, in my opinion, that means that Binance has really strong relationships with market makers, and that they were able to pool their market makers and pull market makers over from Binance's main entity, traditional Binance.com to Binance.us. And why is that important? Because the liquidity pools are actually separate, I believe. So if you were to change or trade on Binance, the pool of liquidity, the order book, is going to be different from the order book that you trade on Binance US. And that is mostly due to regulatory reasons. But so it's bifurcated liquidity. So the fact that they're actually getting increased liquidity, the fact that they're actually, getting market makers on board is relatively important. But I think it also does go to show too, how influential Binance is in the industry, that in a week or so, they're able to really fill up the order books pretty substantially with market makers. So good on Binance US for carrying over those relationships. And I think that is going to be important for them to compete against the likes of a Coinbase or a Gemini or a Poloniex, etc. Although Poloniex, who knows? RC Phantom says, is Binance US open now? Yes, indeed they are. So Javiana says, are you bullish? Right now, I would say I lean slightly towards bearish. I'm net long, so I'm too lazy to actually make any type of long-term trade. There's one trade I'm waiting to make, and that is when H bar actually is added to margin trading on an exchange. I am waiting and ready and rip-roaring to short H-bar with a large size position, but I cannot do that yet because I don't believe you can actually margin trade and or there are any futures available for H-bar. But short-term, bearish, medium to long-term, bullish. Right now, just basically net long at this point in time. So being that I'm net long, you should probably be net short, right? So Max says two things. Max says, number one, no fees on Binance US helps liquidity. I would say yes, but I would bet the majority of liquidity is coming from institutional market makers. So I would bet that is coming from liquidity providers mostly, and not as much from the end users. So I would say certainly the no fees helps, but I do think that it's probably mostly from kind of actual professional crypto traders that are providing liquidity. And then Max goes on to say, how is Binance US able to list BNB obvious security? To be very frank, I am relatively surprised that Binance listed BNB. I do think that BNB is something that is a really interesting crypto asset because it is one of the few that has performed very well when basically all other altcoins have fallen to absolute shit. And the reason it's performed well is because it does have elements of a security where you are having a buyback with Binance is buying back the asset. And there are some other, there's kind of token burns and things like that. There are a variety of things that make it so that it reduces the supply. And to Binance's credit, to CZ's credit, and to the team's credit, they've done a ton of things about increasing the utilization of BNB. There are a lot of ERC20 tokens out there and a lot of ICOs that went through the process of creating a token, and they've kept a very static use case. Binance has never been afraid to just kind of throw shit against the wall and see if it sticks. And in many cases, it has stuck because the price of their token has done very well. It's pulled back a lot recently. It's probably pulled back like 50% recently, but it has done well in the long term. So in the medium to long term, just about as well as anything besides Bitcoin or maybe like Chainlink. So Binance and BNB has been interesting that way, but you do have these like elements of a security where you have a token burn. You kind of have almost like pseudo access to profits. A lot of people call BNB like a pseudo security. Exchange tokens, there's probably a decent percent chance that they might even be securities. Does that matter? Does that not matter? You might say one thing, you might say another. A lot of people are outside the U.S. and don't give a flying rat's ass what the U.S. security laws are, how things are functioning. And trust me, I get that. I get the comments every day where it's like, Bobby, we get it. You live in the U.S. We don't care, and that's fine. I apologize on the U.S. centricness of my content on some occasions, so I do apologize on that. But I do think that the overall judgments of the SEC do somewhat matter. But in the long run, one of the things that I thought I saw a comment on that was relatively interesting was that somebody said by not listing BNB in the US, that Binance is essentially admitting that it is a security. So almost better to go ahead and do it because then you can fight it afterwards. And if we saw anything like what happened with EOS, obviously the EOS news was crazy. I didn't even talk about it. I talked that morning about the stupid crypto ratings castle, and then we have EOS come out with the SEC and their big settlement. But I think Binance just took an aggressive view and said, you know what, if we don't list BNB, it really does go to show, we're kind of giving up and we're admitting this is a security. So we're going to go ahead and do it anyway, maybe. And that's total speculation on my end. I am not in the room. I am not a lawyer. I have no clue, but that would be my best guess. And so I'm sure YouTube is already, I'm sure every YouTube channel and podcast that you listen to has already covered this ad nauseum and really kind of dove into it. But this was, I think, relatively shocking for a lot of people. And it was also kind of funny, too, to see there's really almost two distinct sides of the Bitcoin / cryptocurrency spectrum. You have, I think there's a lot of people that are the quote unquote like super OGs, the very hardcore libertarians that got into Bitcoin and into crypto in the 2010, 2011, maybe 2012 timeframe that are just very anti-government. They don't want any government intervention. They're just not a fan of it, and they wanted to get the hell out. They want the SEC to be gone. They want the government to be gone, and that's that. And then you have other folks that maybe they're hardcore Bitcoiners, but at the same point in time, they also think that everything else is, an illegal offering and a security, and that the government should go after every single one of these companies that performed an ICO or anything like that. So when EOS settled with the SEC, they kind of went head at it and went head. It was very interesting for me to see the reactions. I'll leave it at that. But in the grand scheme of things, this was a freaking huge win for EOS in the long run. I mean, the fact that they raised, according to allegedly $4 billion and paid a $24 million fine, it's peanuts. Absolute peanuts. So Hunter says, thoughts on dumping Litecoin and putting that money toward Bitcoin. As of now, I'm scared Litecoin is just going to fall apart sooner rather than later. A lot of you guys know I'm not a huge fan of Litecoin from an investment standpoint. I don't see a huge use case, and you can certainly make money in Litecoin maybe in the future, I'm sure. But if it's between Litecoin and Bitcoin, I would rather have my money in Bitcoin 10 times out of 10. I think that they're somewhat complementary use cases, but I don't buy the Litecoin sales pitch of we're Bitcoin's testnet. I don't buy we're the silver to the gold. I don't necessarily buy the golly jeepers fast transaction time. If Bitcoin all of a sudden the transaction fees go up to $50 again and every crypto asset starts pumping 10 to 100x again, maybe Litecoin's a good fit then. But as of right now, I think Litecoin will probably continue to lose out value against Bitcoin. So I think I'd rather have my money in Bitcoin personally. Paul Gadina, what's up, brother? So Gordy Boy says that U.S. news about EOS should have moved it. I don't know what moved it is referring to, if that's the EOS price, if that is the price of the crypto asset market as a whole. If not, but I mean, if anything, it's a positive for the price of EOS. So, and I think it did jump about 5% on the news overall. Dave G says, how's Lightning Network holding up? To be honest, I'm going to assume that's a sarcastic comment in regards to me saying Litecoin does not have a great use case. If so, I appreciate the sarcasm. If not, I'm sorry for taking a thoughtful comment as sarcasm. But either way, I would say that Lightning Network is coming along slowly. I do think that overall with Litecoin, the biggest. Let me pull this up. Where's Brown? So we'll look at this comment. So this is from Connor Brown. He's a Bitcoiner, very, very strong in his beliefs about Bitcoin. So he says this: even if Bitcoin had 10,000 transactions per second, people still wouldn't use it for payment. Number go up is too powerful. And so I think this is an interesting comment because it is contradictory to Lightning as a whole. And that is also contradictory to everything that is a transactions per second cryptocurrency for the most part. Anything that's sole purpose right now is transactions per second and not necessarily platforms, but just transactions. I think is somewhat contradictory in its use case against the quote unquote number go up. And this is kind of the new meme for Bitcoiners and something that has a little bit of staying power for sure. But orange coin go up, number go up, whatever you want to say. However, when I'm looking at this, I do think that when you look at even if Bitcoin had 10,000 transactions per second, still people wouldn't use it for payment. That's basically saying people wouldn't use Lightning Network, which is the biggest hurdle for Lightning, is that I don't think a lot of people want to spend Bitcoin. The narratives themselves are somewhat competing because you have one narrative where we've talked about it before. It's store of value. It's digital gold. It's, Bitcoin is going to increase in value. It is always increased in value. It is going to continue to increase in value until the day you die, because Bitcoin, the inflation cycle, and yada, yada, yada. So it's going to continue to go up. On the other end of the spectrum, you have something like Lightning, where, fast transactions, maybe you could buy a cup of coffee with it. Maybe you could transact quickly with a friend, etc. I do think that for the biggest obstacle for Lightning personally is not the tech. I think that the biggest obstacle for Lightning is the number go up versus people transacting on a consistent basis. That I think is somewhat contradictory. And yes, maybe at some point in time you have Lightning where exchanges accept Lightning deposits and withdrawals, and you get things super quickly. That way, that would be a fantastic use case. Maybe it's just better for transactions with friends, but and kind of moving money between parties. But I do think that it is difficult in terms of spending Bitcoin, because using it as payment, nobody wants to be the Bitcoin pizza guy, right? We've said it before. We'll say it again. Nobody wants to spend a bunch of Bitcoin and then 10 years from now, a year from now, 5 years from now, that Bitcoin was 10x of what you had transacted it at, and then you're tweeting about, some of the OG guys on Twitter were tweeting about buying a mattress for like a ton of money, buying a hat that was a Bitcoin hat for like 1 Bitcoin. It's like a $8,000 hat now. Funny things like that. Like, nobody wants to be that person, right? So somewhat contradictory against Lightning's overall in a value prop. So we'll see how it pans out. Short selling crypto should be illegal. Don't be a bitch. Efficient market discovery. If you want to short something, go ahead. Go ahead and short it. Seriously. You're a little baby back bitch if you don't want shorting in crypto. So taking a look at some of these questions, apologize on the delay. John McAfee for president 2020, highly doubtful. He's probably going to be eating his own dick in 2020 if we're being honest, right? What do I think of Cardano? Do I believe in Charles Hoskinson delivering a fully decentralized product as he is promising? I'm not Cardano was my best trade of 2017, 2018. Cardano is by far my best trade. Some of you guys rode that wave with me. It was a wild time with Cardano going from like 3 cents to 10 cents to 50 cents to 80 cents to $1. It was absolutely nuts. Nowadays, I am not like a huge Cardano guy. I don't own any. I am not super interested in owning any at this time. I am more interested in seeing ETH 2.0, and I do think that there's other platform plays that are competitive against Cardano and Ethereum as well, that other people are higher on than Cardano. So does that mean it's not going to work? No, it could very well work. It could very well be fantastic. Maybe Cardano crushes it, but I'm not putting my money on it. So Robert Adams says this: why not buy things with Bitcoin? Just maintain what you think you will want to have. So that's a good question, or it's a good question, and I do think that there are certainly people that do buy things with Bitcoin, and I purchased assets with Bitcoin. I purchased assets with Ethereum before. The computer I bought with ETH. Laptop I bought with ETH. A few things. I've used like Newegg in the past and some other places that accept cryptocurrency. So I've purchased things with crypto as a whole, but then every time I do, I'm basically taking USD and throwing it back into crypto, so it's kind of pointless anyway. But I think that it's a difficult narrative for Bitcoin to overcome, because the pressure. Like most people are into, like if we're being honest with ourselves, most people here are into Bitcoin, or they're into cryptocurrency because they bought it at a certain number and they want to sell it at a number higher. That's why most people are in it. And yes, there are some people that truly care about decentralization. They truly care about self sovereignty and a variety of other of the kind of core ethos. But most people just want to buy it and then sell it later when the number goes up. And if you buy it and then you sell it for something else and then the number goes up, you feel like shit. And you've seen other people do this, and other people, it's been in the media, it's been in the press. So there has been this just narrative in the past that I think is preventative in some ways. So Ricky Thompson says, why use a currency that depreciates overnight? Libra is stable. What do you think the citizen will use? Power to Facebook. I'm still doubtful that Libra is going to launch personally. We'll see if it turns out, but I still have my doubts that Libra actually launches when they say it will, just because I do think that the regulatory environment around Libra is incredibly difficult. If you had seen today, we'll pull this up from Bloomberg. Go down to the crypto section. They have a crypto section, right? Boom. So this is from Bloomberg, and it is Facebook Libra payment partners waiver on cryptocurrency. So when Libra was announced, there was a lot of hubbub, a lot of commentary around the quality of the partners. Obviously, they had some fantastic partners that they announced with in the Libra ecosystem. However, they didn't really do there wasn't any real commitment there outside of signing I believe like an initial high level agreement. So there was no really kind of material business. There's nothing material business wise there. So now you have Visa, MasterCard, PayPal, and Stripe are undecided about formally signing onto the Libra charter. So that is something that it does go to show, if people are just expecting Libra to come out and change the world, a lot of the launch partners and the biggest ones, in many cases the most important ones because they're the fintech ones, Visa, MasterCard, PayPal, and Stripe, are potentially not even going to join the Libra initiative. Keep it in your pants, boys, in the comments. I'm going to grab another beer. Give me 1 second. And we're back. So two awesome comments. I just want to say I truly love the YouTube comment section. You guys are the absolute best. Three good comments. Is that a White Claw? No, it is a Montauk Pumpkin Ale. Also aptly rocking the Montauk shirt. Got it last time I was out there. Great brewery. So sponsor me, please. But number one, no, it's not a White Claw. Number two, XRP Legend says XRP is the real Bitcoin. I would doubt that highly. No, it's not. And then number three, we have Bitcoin Satan, who has been highly active in the YouTube chat. So big shout out to you, my man or woman. And she says, the crypto market has been hijacked by the Rothschild globalists. It has none of the tenets originally celebrated by early fans. Yeah, those damn Rothschilds have their sticky fingers all over the crypto markets. And here at the Crypto Bobby YouTube channel, we love exposing those dirty globalists. So thank you. So Wookie says this, Bobby, when will you get into privacy coins? Great question. I have in the past, I have owned Monero. In the past, I've owned Zcash. And I no longer own either of those anymore. Zcash has gotten absolutely mother freaking whomped. Like mother whomped against the price of Bitcoin. Like it's like skydiving against Bitcoin. Owning Zcash is painful. It hurts. It hurts. It hurts bad. And Monero hasn't done that well either. But this is a good read from the folks over at Multicoin Capital. Some of you might know them. Some of you might like them. Some of you might not. I don't really care. It's a good read. So I'll put it in the comments as well. And they call this privacy is a feature, not a product. And what does that mean? So they say privacy is a feature of valuable cryptocurrencies, not a product offering in and of itself. Users should not have to take balance sheet risk, e.g., selling some Bitcoin or ETH for ZEC on less valuable and less secure cryptocurrencies in order to achieve financial privacy. This essay will argue the general platforms like Bitcoin and Ethereum already offer sufficient privacy guarantees for most users to never need niche privacy-focused blockchains. So they had a whole article about it. They had a whole article about why, like we said, it's not a good idea to sell Bitcoin or ETH, probably primarily Bitcoin, for Zcash or maybe Monero, and that privacy is not, you shouldn't own a privacy-specific coin. You should just look for privacy-enabled features within Bitcoin or another crypto asset that you really hold. And I do think that that is interesting because the market clearly, like we talk a lot about privacy, right? Like that's a big feature that a lot of people want to hear about, right? People love privacy. Nobody wants to have all their transactions tracked. Nobody wants to have, the tax man out for them, whatever it might be. Could be a million different reasons. You just maybe you don't want people to track the shit you're doing. I don't care. I don't know. But with a lot of these privacy coins, either nobody's using them or they're optional privacy like Zcash, and many people aren't using the shielded transactions, so they're not actually using the privacy features of them. And as well, if you are looking at them, trading against trading and taking on balance sheet risk, and by balance sheet risk, it means owning those assets, is not a not a fun thing to do. Like we'll pull up the ZEC to Bitcoin chart on Poloniex. Pull it up on a week. In the past, this is from, what do we got? In the past 600 days, Zcash is down 91% against Bitcoin. That's against Bitcoin. That's not against the US dollar. That's against Bitcoin. XMR, we'll pull up XMR to BTC on, let's say, Bittrex. I would expect somewhat similar. Yep, so same time frame. Monero's down 75% against Bitcoin. I think looking at that, you could certainly make some trades here or there, but ultimately speaking, owning a privacy cryptocurrency or privacy-focused cryptocurrency instead of something like Bitcoin is not a good financial decision. If you want to use one of those privacy cryptocurrencies, you can certainly do so. You can definitely make that move. But right now, at least for the time being, those the big ones, XMR, ZEC, and Grin as well, typically trends down. I mean, Grin's inflation rate is outrageous. Every once in a while, it might have a nice pump here or there. But I mean, Grin has been from when it started. Grin's down 88% against Bitcoin in a lot faster time frame. So I mean, if I'm looking at privacy right now, I have zero interest in my own exposure to it. That's just not of my interest level. Mirko, what Bobby, at what price will you buy a dip in BTC aside from my typical dollar cost average? I would probably start going in pretty hard under $7,000. That's just me. Hopefully we don't see that, but I'd probably going pretty hard under 7K. So Dave G says, did regulation kill privacy coins? And that's a good question. There's a lot of chatter about that, specifically in Europe. So you have privacy coins facing, and this is Bloomberg. Privacy coins face an existential threat amid a regulatory push. Gotta love Bloomberg for making me sign up on Brave. And you also had South Korea also doing the same thing. And this was, excuse me, this was not actually specifically European focused, but also the international body, the FATF, Financial Action Task Force. So this was one of the big reasons that a lot of international organization or international exchanges have been delisting privacy coins recently. So Upbit was one of the latest ones. They got rid of RIP Tube, but they got rid of Monero, Dash, Zcash, Haven, as well as Pivex and BitTube too. But the big ones there would be Zcash and Monero and potentially Dash. And then you also had, I believe, Coinbase in Europe, in the UK, got rid of Zcash. OKX dropped 5 privacy coins. So there's a little bit of a risk, I would say, liquidity-wise with privacy coins. And I always figured, too, that would kind of be the first place for governments to go after is these privacy coins. Because if you're not familiar behind the scenes, there are companies that track your crypto assets and can do it extremely, extremely well. For example, Chainalysis is one of those. If you have not seen Chainalysis before, Chainalysis is a blockchain analysis company that works with, you can see here, we create transparency across blockchains so government agencies, cryptocurrency businesses, and financial institutions can confidently engage with cryptocurrency. Keyword there, government agencies. So companies like Chainalysis work directly with places like the FBI, the Department of Justice, Homeland Security, the DOJ, local law enforcement, a variety of at least that's in the U.S., but also abroad, these international institutions as well. Companies like Chainalysis work with them, and basically, if you've ever transacted from a Coinbase or from potentially a Binance or just one of the larger cryptocurrencies exchanges, and you've been KYC'd. So if I put my name, Rob Payon, and I KYC, and I KYC on Coinbase, and they know my name is Rob Payon, they know where I live, they know all that crap about me, and I have Bitcoin, and I take my Bitcoin and I send it to an address. Chainalysis now knows that Rob Payon owns, likely that address is connected to Rob Payon somehow. They know that. And so they're able to decipher who I am, where I'm from, what I'm doing, where in the world I might be, because they've kind of attached themselves to these, to the local, to basically the fiat on-ramps and different places. Again, government agencies, exchanges, financial institutions use it for compliance, investigation, a variety of things. I mean, mostly, I would say for the most part, you have government agencies are using this for when somebody does like a malware investigation. Like if some random town in the middle of nowhere gets hijacked, their computers get kind of hijacked and held for ransomware, and that person says, they get the message on their computer, you need to pay us, 5 Bitcoin or else we're going to hold your computer network hostage forever and delete all your files, and they pay them 5 Bitcoin. Something like Chainalysis can track who they sent it to and find that person. But it does reduce privacy and kind of increases the need for long-term privacy. But then going back to it, Multicoin arguing that privacy is a feature, not a product. So Privacy should be a feature within main cryptocurrencies that are more secure, not necessarily with companies that have their own quote unquote product. So we have XRP Legend and XRP Freak commenting in the comments. And I would say, XRP Freak, you did just make me crack up when you said if you're still holding Verge, you shouldn't be involved in crypto. I personally am holding massive bags of Verge, and I'm really awaiting on seeing that value capture from the Pornhub partnership. That was one of the big things that I think, biggest use cases really in the industry is seeing the value that we're going to accrue with that Verge Pornhub partnership. And so Max says he disagrees on Monero, thinks it's a worthy project. I do personally think Monero is a worthy project. I like Monero. I think it is definitely not a security. I think it is sufficiently or actually decentralized. I am a fan of Monero. I want Monero to do well. I am a fan of it and I like it. I've owned it in the past. However, I wouldn't own it for the time being. I can like something and then I can also think it might not be a good investment for me or for other people. And that's kind of my stance on Monero is I like it, but I wouldn't necessarily want to own it right now. That's my stance on Monero. Out of, with Monero, out of all the privacy coins, I think Monero is the best position potentially to succeed as a true privacy coin. You have, I think Zcash definitely has more money behind it and has maybe a potentially a quote unquote higher quality development team, but the optional privacy versus default privacy is an issue. Richard Holtzman, BTC going to all-time highs. Nope. So I talked about that earlier. And to bring that back up, I spoke about this from the September 2019 market update from Ikigai Management, which is led by Travis Kling on the investment side. And we discussed his commentary where he said, and this is in regards to the title, which gave everybody a coronary and an ulcer, where he basically discussed from a Bitcoin specific perspective, we see compelling evidence to believe we are in approximately the second top of the second quarter of a cyclical bull market, an uptrend that will eclipse previous all-time highs by a wide margin in the next 12 to 18 months. In our view, the number one risk to halting that Bitcoin bull cycle will be a global risk-off shift in the coming months. So that's where I got the title from, for those curious. And I also respect highly the thought process and the research that the team at that Travis and the team do. So I do really like their approach to things. I think that they've been very spot on in the long run. They were spot on October, on September 1st. They have been pretty damn close on. I mean, it's a long out prediction, but people are so kind of far into the disillusionment phase of cryptocurrency that they could never imagine seeing an all-time high ever again. So that's why you get these bitter comments. And this is a good comment as well. So Mirko says this: all YouTubers have become a little bit of a Bitcoin maximalist in the last year or so. It goes together with BTC dominance. Any thoughts? Will we not see an alt season anytime soon? That's a good point. I would not say I'm a Bitcoin maximalist. I personally have the most confidence in Bitcoin being a digital gold store of value and being kind of the number one crypto asset. I also do think that in select scenarios, you might be able to outperform Bitcoin. And I also like speculating / gambling with the money I have in crypto. So shoot me, whatever. I don't care. So I'm not a hardcore Bitcoin maximalist. I do think Bitcoin is number one and will remain number one. I also have money in Ethereum or in ETH. I also have money in Tezos. I also have money in, oh my God forbid, Leo. I also, that's where my money's at. So I am not opposed to things outside of Bitcoin, but I think it is also not sexy right now to talk about altcoins. Altcoins have gotten absolutely smashed. And for the most part, most people, you've had a lot of people on YouTube, especially like in 2018, you had a lot of people. I mean, there still are videos too, but you have a lot of people that are like, what altcoins are going to crush it? What altcoins are going to outperform Bitcoin? What are the best? This, that, and the other thing. And they were totally wrong. And I mean, I've been wrong a bajillion times too. But people that were like really, really shilling altcoins super, super hard. And I mean, I've had my money where my mouth is the entire time, and I've been negatively affected by it as well in some scenarios. But now it's definitely like the safe place. If you are a Bitcoin maximalist, it is safe. If you come out as an altcoiner, if you are like a shitcoiner, like people will yell at you and make fun of you and say disparaging things. Like it's literally not sexy right now to have any money in anything but Bitcoin. And I mean, you've seen it with prominent investors in the cryptocurrency space on YouTube that maybe or may not have had spreadsheets that were big into ICOs, big into altcoins that were like, hey, I'm a Bitcoin maximalist. Like, no, you're not. But you're just going for where the best returns are, which is fine. But don't say you're a Bitcoin maximalist. But when I think about everything right now, I think it's all cyclical. Right now, it's super sexy to be in Bitcoin. You feel a lot safer there. Like if you come out and say, Bitcoin is the best thing ever, there's going to be a million people that cheer you on. If you come out and say, it's going to be an alt season, you're going to have 5 desperate people that are like, please, sir, please, maybe, please, we'll see an alt season. And I also do think that realistically speaking, a lot of the ICOs, a lot of the altcoins are absolute dog shit. Like if we've learned anything over the past few years, most people are barely using things like Bitcoin and Ethereum at a large, like in the grand scheme of finance, in the grand scheme of technology, most people are barely using Bitcoin, Ethereum, and some of the other larger crypto assets and platforms. So people are not using like the lower quality altcoins. And in many cases, the utility tokens do not capture any value whatsoever outside of value from your pocket into the founding team's pocket. So that's the big value capture for a lot of these has been your money to somebody else. That's where the value has mostly gone. So I think a lot of people just don't see it there unless for somehow, some way, there's a value capture and a value accrual. You're not going to see much success with altcoins for the time being, unless there's just like this like global macro hypey crypto mania again, where Bitcoin like rises to the tide, a rising tide lifts all boat type scenario. So Mirko says this, let's just say that your BTC portion should at least follow the Bitcoin dominance to be on the safe side. That's actually not the worst scenario ever. Like, it's probably not the worst idea to have your portfolio somewhat mimic the Bitcoin dominance. Although that might be more of a lagging indicator than a leading indicator. So you might actually, lose out on some. I don't know. I'd have to think about that more, but interesting commentary there for sure. And if you are new to the channel by any chance, make sure to hit that thumbs up button, hit that like button as well. And I mentioned this before, but for anybody that's been new, who's watching this, if you're on the West Coast in the U.S., I don't have the job listed on my website, but I do have an opportunity for recent college graduates. If you've graduated college recently, you're living on the West Coast, maybe you have a few years of sales or client services, customer support experience in finance or fintech, I have a job opportunity with a company that raised $25 million in a Series A. They're a crypto trading platform, and they're looking for a junior client services person to join their organization. Salary between like 50 to 75K. If you go to proofoftalent.co/careers, send in your resume. Let me know you'd be interested in it. Would be happy to reach out. Had a bunch of people apply. One thing of note, probably a later schedule for this client services role. It's like a 2 p.m. to like 11 p.m. type role. So if you're cool with that, let me know. Company is literally like one of the best companies in trading wise, crypto trading wise software. It's the best company in the space, in my personal opinion. Connecting to exchanges, does incredible work. I have a ton of customers already. Raised money from some of the best VCs. So make sure if you're on the West Coast or you know somebody, I have a $1,000 referral bonus if you refer somebody that gets hired. So make sure to always let me know about that as well. Taking a look more at some of these questions here. Let me see what we got. David says, thanks for showing us compound finance last December. I don't want to toot my own horn, but I was pretty early on to the whole DeFi thing with compound finance. That was pretty awesome. Although, really, December was basically the bottom of the market. So if you had your money in Bitcoin from then on, it was pretty nice for you. But compound finance still one of my favorite DeFi apps, and I think one of the best places to keep some money on the side if you're looking to earn interest in the long run. MG Blazer says, is Proof of Talent only New York and West Coast? So I'm personally based in New York, live in the city. And just because a lot of the connections I have in the industry are in New York, a lot of the job opportunities in the companies I work with are based in New York. So right now I actually work with 12 companies. Probably like 75% of them are based in New York, and the other 25% are in San Francisco and Boston. So mostly I Proof of Talent is US based. I don't have any international opportunities right now. Pretty lean team. So we'll definitely expand to that in the long run. But right now it's New York based with opportunities in San Francisco on the West Coast and Boston as well. RC Phantom, I'm going with some Montauk Pumpkin Ale. Oh, good question, MG Blazer. So he says, curious if there's any Chicago stuff going on. So right now, personally, I don't really have, maybe I have one opening for like a DevOps engineer in Chicago. But I would say if you're curious, I mean, generally speaking about the job market for crypto in the US, there's a couple main places. New York and San Francisco are the two biggest job markets for crypto right now in the United States. Internationally, you have places like London, Singapore. You also have a decent amount, I guess, in Switzerland, but I think London's definitely bigger. I would say maybe to a lesser extent Hong Kong. But also Berlin is big, and then Tel Aviv in Israel is big as well. So, but in the United States, I would say New York and San Francisco are definitely the biggest. And then like second, not second tier in quality, but second tier in size of market, I would say Chicago, Boston, and then LA are probably like the second tier as far as the amount of opportunities that are available. Mostly, I feel like Chicago has a very heavy emphasis on trading because there's a lot of talent there that's worked in traditional finance. So it's an easy way to pull people that have worked at these like high frequency trading firms and things like that, open up an office in Chicago, pull some talent from there. They don't have to move. Bingo, bango, you're good to go. Not Binance, Boston. I'm talking about crypto too much. I'm confusing Binance with Boston, but Boston has Harvard, MIT, Northeastern, a lot of good schools. So there's a good student population there. So it's a nice fertile recruiting ground. So Boston's pretty big. And then LA is also growing in addition to, I would say, Chicago and Boston. Yeah, I've seen a lot of. It looked like Chicago had their own. I mean, there's a. I'm sure some of you guys go to these, but there's like a blockchain week every single week. There's like multiple blockchain weeks a week. Chicago seemed to have a bunch of different crypto events. I know the folks at Blockworks Group, which is a good organization. They put on good events. If you've ever checked them out, I would see if they're ever in your city. I think they're going to be in London for the first time in a while. But they do a couple different conferences, and they host Pomp's podcast. They host a few other podcasts as well. So I like the team at Blockworks for sure. They do good work, and they have been hosting some live events that I think are certainly worth the time. So if you are interested, I would definitely check out. It looks like they have. I mean, they're based in New York, so they have a good amount in New York, but also they're out in London and a few other places, Chicago too. So check them out if they're ever in your area as well. XRP Legend says, Bobby, why don't you like XRP? I've talked about it before. I don't need to be like ad nauseum on it. I would say that I don't see a huge use case for XRP, no matter how many partnerships you want to put forward. It's not my cup of tea. I don't love it. I think that inherently speaking, I mean, no matter what you want to say about XRP and Ripple being gifted by a decentralized organization and the nodes being more decentralized than miners in China and this, that, and the other bullshit. You could say whatever you want about it, but if we pull up, like, I think with XRP in particular, if I can find my mouse, wherever the hell that is. Choose my mouse. All right. So if we pull up XRP, we could see, let's see here, metrics. I think one of the most important things about XRP is the inflation. And I think there's a lot of hidden inflation that people don't necessarily know about or don't necessarily see. And I think that's the problem with XRP as a whole, is just the inflation that's occurring with XRP. I don't know where the actual, let's see here. So Masari does a pretty good job of tracking kind of all the details of XRP, and yeah, some XRP Legend says Brad Garlinghouse and is going on Pomp's podcast Off the Chain next week. That should be interesting. A lot of people I know were not happy about that. A lot of like Pomp is a Bitcoiner, and a lot of Bitcoiners I know are not pleased about the idea of Brad going in that podcast. Personally, I think it's Pomp's podcast, and he should have whoever the hell he wants on his podcast. So whether or not anybody likes that or not, I could care less. I think that, hey, it's Pomp's podcast, and he could really interview whoever the heck he wants on his own podcast. So that's number one thought process there. But looking at XRP, I mean, I think the token sale itself, and kind of how it is structured, as well as the continued kind of, let's say, distribution. I don't want to say dumping, but let's say distribution of XRP in the long run is not suitable for the increase of the the XRP price. And that's my thought process. I also think things like JP Morgan coin are highly competitive to what Ripple is trying to do. And, they're better positioned to do it than Ripple is. But again, too, I mean, and this is to say, with anything, I would like to always kind of caveat every statement I make about 90. I think that there are definitely bad people in cryptocurrency. I think that there are shitty people, and I will say when I think somebody's shitty, and I will say when I think somebody is not a great person. I've met a lot of people. I've met a good amount of people on the Ripple team. I've met people that have worked there. I've met people that invested in them. I've met people that have been involved in the Ripple team in one way or another. And I found them to all be high quality individuals and fine people and good people. I just wouldn't put my own money into it, and I don't have any plans to do so. But at the same point in time, you're free to have your own opinions, and you're free to put every dollar of your net worth into XRP if you so choose. Would not be my recommendation for you, but hey, that's your prerogative and it's your money, so go do what you want to do. And folks, at this point in time, I have checked my phone and I have a bunch of emails for proof of talent stuff. So I got to get back to the recruiting grind now that I have, beer and a half in me and I can, loosely get on the game. So I will hop on that. If you enjoyed this video, make sure to hit that thumbs up button, hit that like button as much as possible. And if you are new to the channel by any chance, make sure to hit the subscribe button. And again, if you know anybody and or are looking for an opportunity in the crypto world, proofoftalent.co. I have a number of opportunities. Always feel free to check out the website. And if you know somebody that might be looking for a new opportunity in crypto, I have a $1,000 referral bonus for anybody that you refer that gets placed. And I'll pay that in Bitcoin, ETH, and shit. Maybe I'll even pay that in XRP for you, XRP Legend, if you really love it. So we'll definitely go ahead and do that. But thank you guys so much for your time. Crypto Bobby signing out. Hope you have a good one. Peace.